Alright, today is Sunday, September 7th. Right now, I will just take some time and recap the markets from last week. So last week there were a lot of news reports coming out, and gold has been moving. So mainly I was watching the gold market and taking trades in gold here. So just to look at the weekly chart, we've had this huge breakout of this consolidation since April. So the price level the market was previously resisted at was about 3,400. We had a couple of unsuccessful attempts at breakthroughs, but last week, or the week before actually, we closed into the high here, and this week was a continuation move along this trend. So in terms of the daily chart, all these Ichimoku lines, they are showing an uptrend. We had a very nice support along the Tenkan-sen all along this way, and now we closed last week at 35.86. So I started taking trades on Sunday of last week, almost right when the market opened in the Asian session. And the reason why I didn't trade the week before, even though it looked like it was trending on the 4-hour and 1-hour charts, was I previously took trades at the beginning of August and then got stopped out on a reversal. So this time I wanted to make sure it was a true breakout and not a false breakout that could sharply reverse against me. And the way I did that was I was waiting for the weekly candle close. So like I showed here, the candle that opened on August 25th, unlike the previous wicks here, it closed into the high here. So it actually, if you look very finely, it closed above the previous high. I think it closed at 34.47 was the exact number I recall. And it's different from this candle on June 16th because more time has passed. So the market has had more time to assess this new equilibrium level before making a decision to break out. So I took, I think, 3 positions so far. Yeah, so my first positions were taken on Sunday during the Asian session, 2 during the Asian session, and then 1 just before London Open. So yeah, this position ended up going right away almost, or sorry, not until the next day, Monday, because Monday was a holiday here in the US, Labor Day. But yeah, for 2 consecutive Asian sessions, there were big moves. So the Asian buyers decided the previous week's close was good enough for them, and they decided to buy. Now, London session came through on Tuesday, and then we had earnest buying from the New York session on Tuesday. So you can see here, this caused the market to shoot all the way up to 35.11 levels. So this is about when I think I trailed my stop loss. I took, I think, a 3% risk on this trade, starting around 34.30. I could have taken more, but my free capital was a little bit dwindling from a couple of drawdowns previously. So I took 3% with plans to add more on retracements. And I noticed the pattern in my trading recently. I always take breakout trades, meaning I'm buying at the high and hoping the market shoots higher. So sometimes it can work out well after long periods of consolidation, but other times if the breakout is not realized, then I end up losing a lot more. So I tried to vary my entry methods not only on breakouts. So the first 2 I traded were breakouts, and then after this shoot up to past 3,500, I was waiting for a retracement on the 1-hour or 4-hour time frame to buy on the pullback. So again, it broke out on Wednesday New York session. We closed at around 35.86. And then the next day's Asian session was the retracement I was waiting for. So I have some ideas why this retracement happened. So this was Wednesday. It could have been that the market was getting close to 3,600. It could have also been that there were some significant economic reports coming out the next New York session. So traders who already made some money, they wanted to get flat right before. So let me look at the news that happened last week. Okay, so Thursday was the GDP growth rate report from the US. And then Friday was the PCE report. No, it was the non-farm report on Friday. Let me go to the right week. Okay, my mistake. I was looking at the wrong week here. So Thursday, September 4th, was the, economic report started coming out on Wednesday. So Wednesday, we got the JOLTS job openings report. So that came in under expectations. So what happened on Wednesday? This continued this rally in gold. And then Thursday was the ISM services report, and then Friday was non-farm payrolls. So the tone of the market right now is they're looking for any signs that would cement a rate cut by the Fed. So in the last Fed meeting, Jerome Powell has come out and said that it may be potentially appropriate to look at reducing rates. Market is taking this news to the bank, and a lot of the analysis put it at around a 90% chance of a 25 basis point cut in the September meeting. So yeah, after Friday, a lot of this has changed to even more certainty. Primarily, we were looking at the non-farm payrolls. Again, the Fed's initiative is to balance employment and inflation. So since the market is saying the inflation has cooled off, then the Fed has retasked itself to encouraging employment numbers. So the market is watching all the employment numbers very carefully, including job openings, ADP reports, and non-farm payrolls. So Friday was the big news, and that could be why a lot of traders were getting flat starting even on Wednesday. So profits were being booked here. Thursday, not much action. Everybody is waiting for the non-farm payrolls news number that was released on Friday at 8:30 a.m. Pacific time. So I bought another position here on this pullback because the previous ADP numbers were all looking pretty bad and prior months revisions were going down. I thought non-farm payrolls should miss as well, and the question is by how much. So, but even before this report came out, you can see this after the sell-off, it didn't really hold. Market was gradually buying back, and right before the report came out, we were at 35.59, 35.45. So I'll go down even more. Yeah, so I took a chance to exit two positions on the Thursday session because I didn't know what would happen in the next Asian session. I thought it would be quiet, but I just wanted to avoid another, sell-off here, just in case that happened. Again, that's recency bias, but I held two positions going into the Friday non-farm payroll report. And then actually I put my original third position back on when it looked like in the Asian session we were testing the breakout again. I felt comfortable holding these positions because I knew the recent economic data for employment was quite weak. So combined with the technicals that I saw, I didn't see any retracements happening. So if I look at the weekly chart again, I knew that if we broke out next week, or this current week that ended, would probably be a full-bodied bullish candle. Maybe you could have a slight, pin pullback, but a huge pin number, a pin bar, to me didn't seem very likely if it broke out and then came all the way back. If that happened, to me that would have been a very aggressive buying opportunity. Yeah, it didn't really look like the market could reverse on the weekly time frame because of all the economic data and market sentiment around interest rates. So market in gold is pricing in a cut already. So we had a breakout week this week, and then on Friday's Non Farm Payrolls report, we had a huge miss. So 75,000 was the expected number. Let me go to Friday. Yeah, 75,000 was the forecasted number, and then we actually got 22,000. And then employment rate is also ticking higher at 4.3%. So yeah, going by the jobs numbers alone, the economy is slowing down. And after this news came out, even the market, nobody had been talking about a 50 basis point cut in September. But now the market has priced in at about 10 or 13% for that to happen. Not saying it will, but nobody even mentioned it before, and now some people are starting to think it could be a possibility. But most likely, 90% chance it's still a 0.25 basis point cut. And let me actually talk about the bond market a little bit. So I was also watching the yields to compare a market with gold. So the yields have absolutely collapsed. Remember, the Fed only sets the overnight interest rate. The other term of the yields are set by the bond market and are traded freely. So we would expect the lower duration yields to more closely match the overnight rate. And then as we go farther down into the term sheets, things are less forecastable the farther you go into the future. Primarily, I look at 1 year, 2 year. These have all collapsed last week. You can see here after the news broke on Friday, it's just a complete drop in interest rate yields. It recovered a little bit. Maybe people are getting flat before the weekend. But yeah, most of these are, you can see even the longer dated bonds, they didn't even really recover. They just stayed down or went lower into the close. Yeah. So I saw it's interesting. The notes below the 1 year, they are more matching the long-term bonds, 20 or 30 years. You see this technical pattern where it stays very low. They're almost quite similar. Only the 1 year, 2 year, 5 years, these have some bounce back. But yeah, anyways, I'm looking at these interest rates, and also I'm looking at the differential between US dollar and yen rates. Those are all going down. So everything should indicate that gold is going to continue to go higher. There's no resistance. So unless anyone finds a reason to sell, we could see a sustained rally in gold, maybe all the way up to 4,000 for the remainder of this month or even this year. Let me just take a look at the dollar yen. So dollar yen is actually trading flat. Yeah, we've been pretty much trading sideways ever since July. Let's look at dollar Swiss franc. Dollar Swiss franc is trading down, but not being sold off meaningfully on the weekly chart. It's still being pushed down by this Tenkan Sen, but just barely. You can see here all these candles are kind of coalescing around this level. And it could be that, if the US Fed cuts, it gives leeway for other central banks to cut. So the market is thinking that the margin between interest rates are not going to change meaningfully. But that is not the case in the gold market. So gold is, how would you say, an independent comparison than all the other currencies against the US dollar. Also, oil has been going down. So oil usually matches movements in the dollar. If, oil goes down, the dollar follows. Could be for a lot of reasons, but oil is weak right now. I would say if I could have traded gold against the Canadian dollar, I would have sold CAD and bought gold, because primary energy export of the Canadian economy, it's priced very low right now. So I don't expect the CAD to be very strong. In fact, if you take a look at gold CAD, just looking at the technicals, it's been even more bullish than gold dollar. So for all the minor pullbacks that we see in gold dollar, it's even smaller in gold CAD. And then the breakouts are much sharper in gold CAD. Yeah, let's check USD CAD. Yeah, so we had this breakout back at the end of last year, going into early this year, but right now it's kind of just trading flat. But it could be that we continue the rise here if dollar is able to rally off of some news and CAD stays constant. But overall, CAD is not very strong right now. Dollar index, I was thinking it could be that the US government wants to maintain a weak dollar to encourage exports. So this might actually just be perfect for exporters. Okay, so right now on this gold trade, I profited. Went from a balance of 229 to 240, almost 46,000. I'm holding these positions as I continue to expect this gold bull run to continue. All right. Anyways, I will check back and report more on this trade. Maybe I'll do, just a weekly recap, because there's so many news that's coming out. So next week, next week we will have a Non Farm Payrolls revision. You see the prior one revised down almost, more than 800,000. These revisions have been really high. People have been making a guess that, because of the President Donald Trump, everybody wants to report high numbers, make him happy, and then, the revisions just get swept under the rug until next month. So, next week we will have inflation reports on Thursday, PPI reports on Wednesday, and then consumer sentiment report on Friday. So lots of news still to come, but overall I think the story will be the same, and market is definitely looking for a rate cut later this month. All right, thanks for watching. I'll share more when I see more.